So, guys, welcome back to our second Spaces call with the man, the myth, the legend, Grogu himself. And of course, I've got my co-host Karnvir here. He always shows up. That's just who he is. So we're excited to host this one for you guys. For anyone that's just jumping in here, the reason we're actually doing this, Grogu and I have been going back and forth on Twitter for probably the last month or so, talking about investment theses. I guess that's the plural. So we've been talking about just different ideas for investment, but what happened was there's a specific company he's been watching. The company took off. It's done really well, so it kind of opened my mind up to this idea. And he's been telling me from the start, Rahul, you need to go read this book, 0 to 1. And he's mentioned it a few times. And I was really reluctant because I picked it up several years ago. I picked up this exact book, read the first 15 pages, got bored, and put it down. And I didn't get through it, okay? So reluctantly, I said, okay, fine, I'll check out this book. Picked it up, and honestly, it was the exact opposite of what happened to me last time. I read through the entire book. I think it took me 2 sessions. So within 2 days, got through the entire book. And the concepts of the book were really simple, but really powerful. And when I got to the book, I had kind of a realization around maybe some of my investment strategies that I've had in the past. So I reached out to Grogu and said, hey, why don't we actually talk about this book publicly? He's read the book several times. He's listened to it several times on the audiobook edition. We got my buddy Karnvir involved. So we just made this a collective thing. I said, hey, why don't we actually read the book and just talk about it, because it's helped us in a couple different ways, and it's probably helped Grogu more than I can imagine. So that's why we're doing this, guys. So thank you everyone for that, and everyone that's made it on here. And sorry about my little rant, but let's go ahead and get this party started. What do you guys think, Grogu, Karnvir? Anything you guys want to add here?
No, that's good. Let's just get it started. I'm stoked. I'm glad you finished the book, and I think this is going to be a really good conversation.
Karnvir, anything you want to add here real quick?
Let's get this party started. I want some more thoughts from Grogu about the book, because I read it a couple years ago. He recommended the book to me a couple years ago during COVID, the lockdown. And I've read through it. I've watched a couple of summarization videos, implemented it in my business, just the way I think about things. So now to get a perspective with trading, with the markets, with businesses, let's share some ideas here.
All right. So Grogu, my first question right off the bat is specifically for you. 0 to 1. What is 0 to 1, and why should we pay attention?
The reason I think everyone should pay attention is it's very the hardest thing to do in the stock market is finding a business that is so niche and unique and well ahead of its competition, that if you find it, usually those are the ones that end up giving you the biggest returns. As for many people, when you try to find businesses that have been already established, an example would be like, let's say Netflix has already taken off, and then you try to find Disney after because you think it's going to do the exact same thing. That's usually a little too late to find something, because the business that's kind of supposed to take the market share has already taken care of that, and you might have that second mover advantage come in and try to take the remainder of the market. So it's critical to have that advantage of finding businesses that are just unique, solving the hardest problems, and they're just businesses that are very difficult to build. And if you can find those are the 0 to 1 businesses.
Mm-hmm. Exactly. Yeah. So I guess this ideology applies to both investment strategies, but also businesses and real life. Like if you're in a business, the way you can differentiate yourself is by thinking 0 to 1. So one of the big picture ideas for this book is contrarian thinking, right? It's going against established market wisdom, right? If everyone's looking in the same direction, it's pretty rare that you're going to find the key or the secret in that same direction, because everyone's already looking there, right? And so kind of along these lines, what I actually, prior to this call here, what I actually did was I jumped on Gemini. I don't know if you guys have used Gemini. It's phenomenal. Like, I've been using it for my investment research. It's amazing. So, but I had Gemini strip down core concepts from this book so we can make this very useful for you guys. And one of the things that it talks about is the contrarian thinking. Okay. Now, Grogu, like, you've used this investment philosophy a couple times, right? I don't know how specific you want to go into investments you've made, like Tesla, like Palantir, but are there examples or things that you saw in those investments that helped you understand why you were a contrarian when you made those investments?
Yeah, I think the key is to connect the dots to first know what your skill set is, where your knowledge background is, and then within that you try to find the business. So it's the how has it helped me? It's helped me in a way that the investments that I made in the past, they're there. But the thing is, even like before getting into Tesla, I was already involved with robotics and AI, and I was thinking about that already. But I couldn't connect the dot with like data. How can data take advantage and do stuff? So I prior to Tesla, there were some mistakes that I've made in the past. So I never got the sector wrong. I just got the business wrong. So there were some crypto plays that I made that I thought that were doing the same thing Tesla was because they were marketing themselves as something Tesla does. So I invested into that, made a mistake, found out I screwed up, moved on. Then I found Tesla afterwards, and I found out what I was actually looking for is this is the actual business that's doing it. So the way you'd have to think of it is, Rahul, you want to rephrase that question one more time? I think I'm getting
Yeah.
off
So
track.
I was going to say, like, so one of the big picture ideas from zero to one is contrarian thinking. So when you say, for example, Tesla, when you made that investment, there was something that was against the grain. Like, what did you see in that investment that convinced you that this was a zero to one idea?
Okay, so the way I looked at it is when I got in the car, I looked at the car as a platform. So when I get in the vehicle, there wasn't a car that had an iPhone like feel in any other car. So there was nothing that had a software suite sitting inside the car that could enable delivery services across all boards where you can actually download apps and have an app store within the car. So I felt the potential was there for this car to become a platform also while collecting data for self-driving as well. So it was like a node to me, like it's like a cell phone or an iPhone. So and it was on wheels. So your phone sits at home and it does all that already, but we never had a vehicle version of that. And my vision was, or what I thought would happen, is that eventually, if everybody got on the electric vehicle, like they moved on to electric vehicles, what would happen is that all vehicles could connect to each other. What you'd have is a smart traffic system where you could predict that on these days, traffic, it would be busier here and it wouldn't be busier. And because the cars can talk to you, you can also prevent a lot of accidents because you'd have information on what cars where already because electronically you can connect it. But gas cars weren't able to do that. It was low latency and high latency. So I saw the future that way, where smart cities and the cars would all be part of that one system.
Mm-hmm.
And I felt Tesla was ahead of it. And eventually, the company that would have the most cars out there, that would have their own network, that would be very hard to fight against because it would scale so fast because there's so many cars already out there with the platform. So it was kind of like the iPhone play, but for the car.
Mm-hmm. Got it. What did, let's say, for that specific investment or just that belief in Tesla, did you factor in things like how the world was moving towards a renewable place, or was it like that was like a more of a story in the background and the forefront was the platform idea?
I felt the renewable stuff was a bit of a distraction, but what I did know that technology usually solves the majority of the problems. So I think a lot of people are saying, yeah, battery creating the actual car is still energy, it costs a lot, and then there's also other issues environmentally that are actually more harmful. And then there's people that are fighting against that are saying that gas cars are better. And I've had an argument where somebody said that my gas car is cleaner than your electric car. I'm like, okay, fine, then close your garage, turn your car on, and see what happens. Versus electric car, right? You're gonna die with the one. You're not gonna die with the other one, right? So it was as simple as that. But at the end of the day, my clear thinking was that because we'll have a ride sharing program where if the cars are autonomous and they're going to be moving around cities all the time, eventually we probably won't need as many cars on the road. Because right now they sit in parking lots and they don't do anything. They need to get efficient. And when you make them full self driving, while you're at home, it can like generate capital for you. So that was my long term thinking. Although we're not there yet, we're not even close. But I invested based on that idea.
You know what's so crazy, Grogu? Like when you look at these, when you think about this, like when we're talking about it now, it's so obvious. But why is it that these ideas are always so obvious in hindsight? But when we're trying to see it for the first time, a lot of people wouldn't see it this way, right? I know for a fact if I went back years and I looked at Tesla as an investment, I wouldn't be thinking about the self-driving or the platform business or again, even just the user interface, the iPhone-like interface in a car. I wouldn't see it that way. In my mind, I'm just seeing a car, right? So yeah, why is it that these become so obvious in hindsight? And like, does that have something to do with the fact that it is a 0 to 1 idea?
I think we're constantly trying to predict the future all the time. So we'll take our knowledge on, like, you can watch movies and things and have an idea where the world's going to go. But the thing is, there's something about knowing where the world is going based on what's happening in front of you today versus knowing where the world is going based on not if it's actually happening or not. So when you see a car for the first time and you see like the first application on it, and then you start seeing it's starting to learn how to like drive. It's not there yet, but it's struggling. It's kind of like a toddler. When you sit there, you get an idea. Okay, it's gonna move in that direction eventually. If it's not this company, it's probably gonna be another one. So you kind of have to like make a choice on this is my sector, and within this sector, I know what I'm looking for. So you're not just looking for, and you can have failed investments as well, because if Tesla wasn't the first one, maybe it's Rivian, right? It's just like we don't know. But the key is that once you know what you're looking for, you try to find the right business within that, and you can't give up. So you have to like, so if Tesla, just in case, if Tesla, the Cruise came out, they were doing their own self-driving, and maybe you felt that was the right company to invest in, and you did, and then you see Tesla doing like a little bit better than them, right? And then maybe 3 years down the road, you see someone who's doing it maybe 10, 12 times better than what Cruise did, and then you know they're not going to be able to catch up. So that's usually when you kind of like go, okay, that's a 0 to 1 improvement, but you can't actually pick it until you haven't like spent time in that sector, right? So you have to pick a sector, spend time in it, and then analyze it, and then figure out, okay, because how are you going to technically improve? You don't even know what the worst product in that sector is. What do you compare to, right? So it's got a lot to do with spending time in the sector.
For sure. And when you say spending time, like, are you like actually going and trying the products? Like, what does that mean for you? Do you just research? Do you watch videos? Do you go and check out the vehicles? Like, I know there's other self-driving options like Waymo and Cruise and some of these other ones. So yeah, just clarify what that means for you.
So the thing is, like, you can't naturally, we don't gravitate towards wanting to learn something unless we're naturally interested, because you're not going to want to learn about it because you don't care. But for me, I'm the kind of person that I'm already into robotics and AI. Like, I like learning about that stuff naturally. So I'm going to gravitate towards it when I see something happen. So if there's an improvement in that sector, I'm going to go look at it, right? So you can't like, it's for you, it would be different because it depends what sector you're in, right? You wouldn't be interested in this, you'd be interested in something else. So it's hard to even like find it because you're not naturally interested, right? So what I'm trying to say is that it's you can't teach it, but you can only learn it if you're interested in it.
Right.
If that answers the question, I'm hoping I'm answering the question correctly here.
No, you are. I think what you're alluding to, it's like people have domain expertise and things that they're naturally interested in, and therefore they're able to spot the differences because of their natural inclination for that particular industry or sector.
Yeah, correct.
That was just
I want to rephrase it a different way. Are you looking into it because you like the product more than you're looking at it as an investment? Or is it go hand in hand together?
You can't, like, you have to be naturally interested without putting money in front of you. Like, you have to, like the minute you add money to it, that I'm doing this because I want to make money, you've separated the whole, like the part where you want to learn, because your incentive now is to what can I do to make money, right? Like, yeah, it's nice you can do that, but like the general knowledge of you living your life and doing the things you want to do. Let's say, example, you're in real estate. You know more about real estate. You will know more about technology coming into real estate more than me. So you'll more likely find a 0 to 1 company in real estate before I will, because you're naturally interested in doing that.
Right.
Correct?
Right.
So just like that, I'm naturally interested in technology and robotics and AI, all that. So it just depends where you're interested. And I like testing new software. Not everybody likes to do that. Not everybody likes to dabble and touch new software interfaces and see what it can do, what it can't do. Go around, ask people, do they like it, do they not like it, and watch on YouTube if they're into it or not. I'm not going to go watch fintech stuff because I'm not, like, I don't care about it. I don't find that fascinating, right? But I'm going to go dabble into the new tech that crypto has to offer, because I feel that that's probably more mind blowing to me versus what we've already seen, right? So, like, every sector has tech in it. You just have to know what, like, for you, Karnvir, it's actually Airbnb. If you think about it, right? You
Yeah.
should have seen Airbnb before anybody, because they're scaling the rental property into, like, you're literally getting data on every single property across the globe, where you can click on it and find out how much revenue is generated per property. MLS won't give you that information, but Airbnb will, right? So that's what I
It will.
mean. You
Yep.
you should have had edge on Airbnb before anybody.
Right.
Or
Gotcha.
now, let's say if your dad is into taxi driving, right? He should have had an edge on Uber before anybody. Like, because, but the thing is, now they're so busy working and making a dollar that they forget to invest that 10% of their bandwidth, their mind bandwidth, into what emerging tech is entering my sector to disrupt me.
Okay. Gotcha. Gotcha.
I like that. I like that. Hey, you brought up fintech, and Grogu, I know you've been overly vocal about fintech for many different reasons. I do want to touch on that a little bit, if that's okay with you, because fintech, I think you and I have kind of talked about this several times, provides the exact opposite of a 0 to 1. And I think for anyone that's listening, especially since we've talked about how Tesla has that 0 to 1 potential, we could talk about uh, how fintech has the 1 to 0 potential, and how it will clarify a winning idea versus an idea that's not winning. Do you want to talk a little bit about fintech and what you feel for the space, etc.?
Yeah, for sure. I'm like, the products are great. People are making money. I think the only issue I have is the innovation part, because I don't see them doing anything that's very innovative in terms of like moving, like, away from just payments and turning it into some sort of like platform. Now, the reason I'm so overly bearish about fintech is mostly because I've seen what you can do in the DeFi space and the Ethereum ecosystem, where you can, the whole process of just starting a company or even launching a stock from the LLC side to actually just getting it registered, that can all be done in like one smart contract and then dished out across the globe in like matters of seconds. And then it only takes 2 seconds to generate an ETH wallet to do all these things. So with fintech, you can only do transactions or send stock within the actual network of PayPal or Square, or let's just say any other, Robinhood or whatever, right? But with ETH, you can send it across the globe with no issue. So we generate the stock, um, give it a rule based, programmable, uh, protocol based, some sort of set of rules, because everything is kind of network based. So set of rules of each token that's been launched on Ethereum, and then you can actually, like, it's kind of like a stock market, but it takes it further, and it allows you to also swap stock for stock. So let's just say if all the stock markets were on Ethereum network, you'd be able to swap Square shares with PayPal shares and have that taxable event automatically be done because it's all on chain, and have your accountant link to that transaction and pull it automatically because it's a live transaction. You're not going back to the person who made the trade and asking them, can you pass me the Excel sheet or the PDF file that stated what you bought, what you didn't buy, because everything is done on blockchain now. this has been happening since 2018. And when I found out, and I was like, okay, if this tech makes fintech look like such a joke, why would anyone want to invest into fintech, right? So I looked at it that way. And then the potential of this was so big that sure, there's regulatory issues where you have to obviously set the rules and stuff. But once they got all that figured out, it puts fintech in a, I don't know, like it's like you discovered how to generate a PDF file, but you're still using pen and paper. That's the mindset, right? And then the problem is that a lot of people are still in fintech. They haven't actually fully dabbled into the DeFi or Ethereum ecosystem because they're too scared of fees, because it costs a lot to do things. But that's going to go down eventually, and it's going to speed things up. But the potential of that tech is just so high that I just felt that there's, why do you bother touching fintech at all? So that's why it became bearish 3 years ago.
Yeah, completely. And I think the other thing that you didn't mention on this call, but we've talked about privately several times, is the fact that companies like Apple, who aren't fintech players, can come into that space and disrupt because they have the user base and the ecosystem for it, right? Things like Apple Pay have already started to disrupt some of PayPal's clientele, and now Shopify Pay. There's just so much competition, which actually leads to the next point. One of the other themes in this book is about competitions and monopolies, right? So Peter Thiel in this book talks about perfect competition versus monopolies. And he argues that for small victories in crowded markets, you just, if the market's crowded, you can't get real gains in that sector. And that's kind of what's happening with the fintech space. So the reason I wanted you to bring that up is because we can compare it to an idea like electric vehicles, where they're autonomous self-driving, versus fintech, which is now starting to have a lot of competition take away some of this market share away from them. Question for you: monopolies, perfect competition. Are there like signs? Are there things that you see that give you monopoly vibes, or like how do you know a business is set to be a monopoly, or if they're just competing away their margins?
That's probably a really hard question to answer, because there's actually, it's you don't see it right away. It's conviction rate that builds up. So you see them kind of develop a niche market, and then slowly, like in the book they talk about Amazon, right? Nobody really saw Amazon. It was just a bookstore that's just online now. So you can't really project the whole part where they're going to take over all retail, and then eventually AWS, which will actually host the online businesses as well. So what Amazon became was a giant online mall. So it's hard to, you have to kind of keep an eye on it to actually, so you can't actually tell right away. It's
When
yeah.
when you say keep an eye, are you listening to what the CEO is saying on earning calls? Are you doing, like, you're doing a ton of research, I'd imagine. Like, are you following company founders, executives? Like, what's your go-to strategy when you're stalking these companies?
I think you have to be in touch with everything that's going on in the company, to where they're going and to what they're developing today and how many goals have they accomplished already. So base it off of that. So for Amazon, if they followed from the beginning, they probably saw a bookstore and they probably saw, oh, they have actually started selling something else now too. So they kept adding. And I think eventually it just becomes a monopoly without even knowing that it's going to become a monopoly, because the monopolies that are potentially going to turn into monopolies, they are very good at keeping it on the low key, because if everybody knew about it, then it's kind of like becomes a copycat type of deal where everybody wants to do the same thing. But they eventually just become monopolies. For Tesla, it was similar, I would say, because I actually did not go in thinking for FSD at all. At the beginning, it was just an electric car that I found out. But the minute I found out what else they're doing, that's when I got super excited. And then I started adding more to my to the amount of shares that I had, because FSD was the actual thing. Autonomous driving was actually what I was into, not the electric vehicle. I didn't care about the car at all. It was just the software that I was interested in. And then as I kept going, I kept thinking about, oh, there's also energy. And then energy connected with energy management, where you can't actually manage energy if you don't have a good software to manage it. So that also talked about solar, taking energy from solar, allowing your car to charge. Like everything just became like it just clicked all at once, and then where they're going. And I think even companies themselves actually sometimes don't actually have that goal until they start accomplishing certain things and saying, okay, we can also add this and this and this. And then eventually they just start taking over a market or start creating a total addressable market that has yet to be created. So it's very hard to predict it, but you have to be in touch from the beginning to the end.
Mm-hmm.
So, and you can't be out of touch with the company and what they're doing.
Mm-hmm. Mm-hmm. You know, it's funny that you talk about monopolies and competition. But yeah, I think in the book it very clearly says that companies that are building the monopolies actually downplay their monopoly because they don't want to be hit with antitrust and lawsuits and fines, and they don't want to be under scrutiny from the government. So any company that has an actual major monopoly will actually downplay their monopoly versus smaller companies that don't have a monopoly, they'll try to say that they have a monopoly or a differentiated product. So it actually talks about that in the book, which is really, really interesting, I find. In terms of like, okay, do you know, like, how do you decide when it's time to move? Like, let's say, okay, you're an early investor in a company does really well. You spotted the 0 to 1. You saw some of the things that you're good at picking out in specific industries. Company takes off. When do you decide that the company is no longer going on this path? Is it just based on like growth and revenue, or is it just like, I guess the question I'm asking is like, how do you know when you should move the money into something else?
I think it's just if other players start coming in and they start chasing and they're not far away from what the company has. So something like Rivian, I've like I tested it and saw what their software is. It's pretty good compared to Tesla's, but it's not exactly there. But I wouldn't say it's separating itself. It's not that far off.
Mm-hmm.
So example would be that. So if I see that happening and then I see another company come in and do that, and I feel like that makes me feel that their other competitors are figuring it out as well, and they're going to try to like get into that market as well. So that scares me a bit. So a close friend of mine who got into Netflix super early, he got rid of the shares. I don't remember the price, but it did go take off another 100 and 120% after that, which is fine. But he called me and he's asked, "Do I see anything in Netflix from wherever currently what they have?" And I just said, I don't think there's anything else. I think everybody's figuring out. You got Amazon Prime, you got Disney coming out, you got all these new streamers right, left, and center that are doing the exact same thing. The only advantage Netflix had was that their user interface has just been better than all the other ones, which we all can agree that it is still, right?
Mm-hmm.
So that's the only advantage they really had. And then they had the production money. And sure, you can create content, it's great. You can still continue to win the market, but it's still a fact that those other secondary players are going to start to chew away at your market eventually.
Mm-hmm.
Because
Mm-hmm.
people want to watch something else on a different channel, on a different platform, they're going to go there now. And some of these shows are moving from Netflix to other platforms as well. So you kind of have to keep an eye on what else is going on in the market, who are the competing players. But don't think every player is a competitive player, because some of them actually talk more than they do. So you have to be someone who's willing to see the product for yourself and also look at their run rate, see if they can actually like stay healthy and also scale their product as well. So like, sure, Rivian is great against Tesla, but like they still have to create factories, right? So
Mm-hmm.
there's all these things that are involved that you have to go through to actually get there as well. And if they don't, then they might not actually harm Tesla that much, because they already have multiple factories already running around and they're scaling their product way faster, right? So it's definitely a harder question. There's a lot more detailed research going involved in it. So I mean that's the best way I can answer it, if that helps.
Yeah. Yeah, it's definitely, it's hard to talk about this publicly because it is very complex and there's so many different factors you have to take into account. Um, that even when we talk about one specific company, we're not able to go enough into detail that every listener is going to understand every reason why X company is a company that's 0 to 1. Um, when you read 0 to 1, I think when was your first time reading 0 to 1? Do you remember?
Oh, when did I read it? I think 2019, like beginning of 2019.
Uh huh.
The minute I read it and finished it, I think I just started telling everybody to read it.
Yeah.
It was like my first thing. Whoever came was like, "Oh, I want to invest. I want to learn." I'm like, just go read this book. It'll just change your thinking, and then we can have a conversation because it's very hard to. Because everybody wants to know what stock to buy, and I always say that's not an easy question because if I tell you what to buy, your conviction rate isn't there, and you're still going to come back to me asking me what to do next. I'd rather have you learn to pick your own stocks
Mm-hmm.
and then bring that information to me and then give me the reasons why you picked it instead of asking me why
Mm-hmm.
you should buy what I buy, right? So I try to avoid that conversation. So I started because the thing is, how long are you gonna do that for, right? Because I've had accounts on Instagram before where I completely nuked all these accounts because I started getting all these similar questions. What are you buying? What are you buying? What are you selling? I'm like,
Mm-hmm.
that's not serving you or me. So
Mm-hmm.
in any way, nor is it teaching you or guiding you to do what you want to do, which is to become capital efficient on your own. So right, so that's why I said just read this book. And that was 2019 is sort of recommending it to everybody, and I still do.
Right.
Grogu, did you ever direct people into going looking at BlackRock's investments or Kathy Wood's?
Never.
Take a look at what
I don't.
some of the big
I
guys
don't.
do.
I don't recommend anything. All I say is read the book and learn how to read a financial statement. If you can pick a stock and read a financial statement, you're well ahead of majority of the people.
But wouldn't the easiest thing to do would be to just pick one of the larger companies, see what they're doing, and just invest alongside them and learn about the companies as well?
Sure, but you're picking something that's already established. You're not going to find that 10x, 20x, right?
Perfect. That's what I
You'll
was looking for.
you might find a one or two, but that might be enough for you. But that's not going to make or break your actual like life changing capital. Only you can only get by finding those gems, right? So, which is hard to do.
Mm-hmm. And even with those companies like the BlackRock, the State Streets, the Vanguard Group, they've got so much money that they throw money at almost like literally every investment. So
Yeah,
I know most people don't have that kind of capital to throw at 10 different companies, you know?
yeah, and you're spreading out your capital in a way that you can do these big companies. You can do ETFs, that's fine, but there's positions you're doing conservative positions, and then you have those positions that might like send your portfolio to another galaxy.
Mm-hmm.
So you have to base it off that. Just like it's capital allocation, just like bandwidth allocation of your mind. And when I explained that the taxi driver should also allocate 10% of his bandwidth to learning about the emerging tech coming into his business, that same mindset has to be applied to your investments as well, because you need that 10% to apply to like these new companies that are like kind of emerging in a way.
Mm-hmm.
So very similar capital, mind, bandwidth allocation percentage wise. So
Mm-hmm. Yeah. Yeah. So it seems like your expertise really is software, right? Even Tesla, of course, it's an EV company. Your interest in Tesla was actually on the software, self-driving, the user interface, like smartphone, like user interface for vehicles. So your expertise is software. So another question for you is: are there any sectors uh, that 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 might be being overlooked that have a lot of opportunity using software or using your 0 to 1 philosophies?
yeah, I think ideally from what I'm hearing is that software is completely changing right now. So you have software that are application based. So you have your cell phones that will have apps on it. That's one way to build it. And then there's new software now which are AI based that are building new software companies using old data that already exists. So that's a brand new way of looking at things, and in a way that is secure now because internet was built in a way that the cloud system was all set up in a way that it wasn't actually fully secure, and it still isn't to date. There's a lot of things that are missing. So you have to build brand new ways that are protecting the data at the same time you're building applications on top of the secure layer of data. That's the new way of building it. Now, how to explain that? You have to first onboard all the old companies onto a new system, which has to be a secure layer. And then you can apply the AI layer on top of that to build new businesses. So, but the first step right now is to get all that data onto a secure layer. How do we do that is by having some platform that is being used in every business and connects all the data together. And then from there, you can build those businesses. So I think a lot of this thinking is kind of just in my head right now. And I think a lot of it will not be understood by a lot of people. And sometimes when I talk about it, it just goes over people's head. So all I can really say is just AI is important, but prior to that is security. You have to have a secure data layer before you can actually even dabble into the AI side.
Mm-hmm.
So focus on that first, and then the layer above that is the AI layer, and then the application above that is going to be the third layer above that. That's going to actually be the new businesses that are going to build on top. So what you might see today might not even exist, or it might exist, but it might be another version of it, if that makes any sense.
Mm-hmm. You know, one of the things I picked up from you is that you don't really diversify much. Like, you're not into the whole diversifying your investments. You're pretty much, what are you, like 100% in like one direction, one company?
Well, I don't see a point in investing in stuff you have shallow knowledge in. So if a doctor is good at, like, let's say if a surgeon is good at surgeries, why would he diversify into teaching? So what I'm saying is, it's kind of like picking a career that you have to find out what your strengths are, and you have to base your investment on that, because you can only have conviction in areas you have strong knowledge in. So, and then when you diversify too much, which is, let's just say, from different, like, what is diversification? It's two ways of looking at it. Are you diversifying within the stock market, which isn't actually diversification at all, because if stocks tank, everything tanks when you have a black swan event, right? True diversification is truly, okay, having a little bit in the stock market, having a little bit in cash pile, having a little bit in real estate, having a little bit in gold. So you have different markets that you're spreading out your funds, which I do. So it's partially diversified. But when you claim that you're diversifying within the stock market, they all tank together, and we've seen it on and on again. So it's not really diversification. So I'd rather just invest into what I know is going to do well based on what I have knowledge in, and allocate a chunk of my capital in there, instead of spreading it around in the stock market where everything's going to tank anyways if it all goes out at once.
Okay, I have a question for you. So, like, one of the things that Peter Thiel talks about in the book is that the market is organized for a winner takes all. Um, that's just how the market's organized. So, like, winning companies take the vast majority of market share. Do you think that's going to be a theme that plays out in the future, or are you going to, or do you think it might go into like certain themes play in certain areas based on what's important for that area?
Can you rephrase that question again?
Yeah. So, like, again, so I'll repeat it. So Peter Thiel says that in the future, the market's going to be like a winner takes all market,
Mm-hmm.
right? Now, whether or not that's true, who knows? So that's what I'm asking. Is like, do you think it's going to be do you think we're going to be globalized to the point where it becomes a winner takes all, or do you think there'll be different companies doing well in different areas based on what's relevant to that area? And I'll give you an example using electric vehicles. We know in North America, Tesla's kind of the go-to electric vehicle. Has a rechargeable battery backup system, whereas places in China have NIO, and NIO uses the battery swap technology. And so that's a big differentiation between an electric vehicle in North America, electric vehicle in China. But Peter Thiel in his book 0 to 1 argues that in the end it will always be winner takes all. Do you subscribe to that, or are you more towards like the decentralized winner in certain markets type of ideology?
I think the winner take all works in 2024, like from probably 2022 and on, is the company that ends up not disrupting but integrating every other company within their business to a point that everybody needs to use them, is the winner take all scenario here. You can't have a single player just kind of lead in a way, and then you're monopolizing in a way that you're also helping other companies as well. So you have to have a business that does that. An example is AWS, which was hosting a whole bunch of businesses, which helped them in a way that actually expanded their own market, right? And then after realizing Google and Microsoft came out with their own solutions. So winner take all can happen, but if you can do it in a way that's also assisting other companies where it's doing it in a way that is so good that it's very hard to switch over to somebody else, or not even needing to switch over because you can just use it on that platform in a way, like not need to switch vendors from Google to AWS, or you can use them all. I think that's the approach companies should be taking in 2024. And a lot of the investments that I am into is technically doing that.
Right. Do you think the like do you think the monopoly do you think that these companies, when they become monopolies, do you think that can have a lot of, like, I guess it's a more political question. Do you think it could have like a bunch of negative implications where, like, let's say a company's too pervasive, like they just have so much power and they misuse their power? Do you
Yeah,
think that always ends up happening, or do you think we can have a healthy balance?
we can have a healthy, but I think in the book he also explains that the idea of his way of thinking of monopoly is that you become powerful in the type of services you provide, not political. So political would be when you have so much power that you control the market now. So there's two different ways of looking at it. But having a competitive advantage, which is 10, 20 times better than any competition, and then monopoly, an actual political monopoly would be that you are now not allowing competition to brew because you own the market. Because you have, so Facebook does that by buying out the companies, right? So it's hard to compete because you just keep buying them out nonstop, and then they can't really do anything. Amazon kind of did that to Square at 1.2, where Square just launched their own that little Square terminal that they had to actually swipe cards, and Amazon was going to disrupt them, but they didn't, because that would have put them in the flag of being a monopoly now. So there's two ways. You can't, don't do it in a way that you like, you can't have, like, in Canada, you can't have an oligopoly where don't allow Uber because taxi drivers are saying that, hey, no, Uber's bad. You have to let that in and see how that works in the market and let the free market decide if it's good or not. So it has to be done in that way. So I don't think it's all evil. I think it's just the way it's described in the book. It's talking more about not political, but more of competitive edge, where you're monopolizing in a way that because your product is so good that you just become that powerful. So, and then somebody else has to come in and disrupt you in a way that is not obvious. So, like, if there's Amazon, is there anything that can be 10 times better than Amazon without even being Amazon? So then it's not being flagged as a monopoly. It's just coming in as a different player.
You know what's crazy? Because this reminds me of this Warren Buffett in one of his annual shareholder meetings, and I think I've told you about this privately, but he pulled up the top 20 companies. I think it was like 100 years ago, maybe like 50 years ago. Don't quote me on that, but I'll try to find it. I think it was in 2018. So he showed the top 20 companies in the S&P 500 in that time frame, and then he showed it, whatever, 50 years later, the same top 20 companies in the S&P 500, and none of the companies were the same on the list. So none of these companies that were top 20 ended up being top 20 much later. Okay. Do you think in the future, do you think we're going to go in the same direction where all the top 20 companies right now, they're going to get disrupted at some point? Or do you think we've hit that point in the market where these companies are just so powerful that they'll probably be around and dominant in the future?
I think there's going to be a change, but it's because technology and data is moving so fast, the amount of information we're collecting right now, that it could create a business that is completely unthought of, and it just starts creating its own total addressable market. So it could, like, even 20 years ago, there's some of those other companies still relevant, but they're not the top because the tech sector took off, right? Eventually. And I think a lot of people thought that tech might not do as well, but eventually people didn't realize that if you're not in tech, the tech will be inside your business eventually.
Right.
And now almost everything is tech. So the leaders that started with tech are taking off. The ones that adapted to it later are now kind of left behind. So same thing could happen later where whoever is the leader in AI might take off, and then people who adapt later, they might not be in the top 10 list, right? So who's
The,
really doing that?
the reason I asked that question is because a lot of the tech companies today are built on data, and when you amass a lot of data, it becomes exponentially harder to disrupt because of all the data you've collected.
Yeah.
And other companies would need to build that data over time, right?
Yeah, exactly. And it's like there's all these rules that are applied to data as well. Like eventually there's going to be a point where they're going to have to get consent from every single person to collect that data. And that might actually be costly to them because each person from a device on their phone could actually monetize it. And now that becomes a problem for some of these companies because they're literally getting insights from you because you jump on Instagram for free. So they're selling your data to advertisers, which are targeting you to buy stuff. Now, if it's free, you're the product. So at the end of the day, can you monetize that in a way that if you want my information, you have to pay me or give me a cut of some sort? And I think that's going to happen eventually in the future. And that's where that security layer is going to come in. And it's going to say, okay, now in order for you to get access to my data, you have to ask me first. So you might get an alert on your phone asking you, oh, this person's trying to probe your data. They're trying to get your data now. Do you want to allow them? Then you can put a cost on that.
Mm-hmm. Mm-hmm. Yeah, it's really interesting because like a lot of the technology is one, it's changing quite fast, but things like AI is just changing the way we've understood technology last 20 years. Question: does OpenAI overtake Google?
I don't think so. I think OpenAI is advertising itself as open, but it's obviously Elon has its closed. It's obviously still trying to be a profitable company. I think they're going to get hit with a bunch of lawsuits eventually because these
Oh.
training models are using images that are from somewhere, some database or API that they're pushing or pulling. It's kind of like the whole Napster situation going on right now, creating all these things, but no one's actually hit them with a lawsuit yet. So it will happen because at the end of the day, it's still data from somewhere that it's training on, right? Whether it's open or not, we don't know. And maybe that AI that they have set up right now with the LLMs is not actually sorting through what can and cannot get them sued
Mm-hmm.
because they don't know how to regulate this stuff or
Mm-hmm.
what could be the actual issues. So, and that's why I say the security and the governance layer of data is so important because and having access to and what you're accessing should be done in a way that you're figuring out that is that illegal or legal. Can this cause me a lawsuit in the future or not? Right?
Mm-hmm.
So it has to be done in that way. And if it's not done in that way, then you're just asking for trouble in the future.
Right. Is there a AI 0 to 1 play that you're seeing at this time, other than the one we all know about? Actually, you can mention that one if you want.
Not someone, not really, because I don't see anybody else working on governance of data right now. There's not many people are jumping on it now, but this company has been doing it for about 20 years now.
Mm-hmm.
So, and they've already figured out all the issues they need to figure out, and that's why they have such a footing in the government as well, because of that. So it's I don't see anything else right now. There are other players that are trying to tackle this now, so we'll see. I mean, there's also Anduril, which is a private company right now. They're focusing on defense, strictly just defense, and they have their own software that allows their hardware to be deployed in the battlefield. So they're bringing the cost down for needing machinery for warfighting
Mm-hmm.
because now you can use small things that can actually disengage or disarm something instead of actually needing to kill somebody, right? So they're doing it in a totally different way, which is not only cheaper but also a lot more efficient.
Right. Right. Where do you hear about these companies? Like the 0 to 1 companies or companies that have the potential to be 0 to 1? Where are you finding out about these companies?
You can go to Peter Thiel's founders, I think it's fellowship program. There's a bunch of companies listed on there, but they're not like he doesn't always invest into. I feel that he's made a lot of mistakes as well. So
Mm.
you have to kind of see what's important and what's valuable and what's going to be in the future, and then base it off of that. And then sometimes the company you're already in has a connection with the other company, and then you can kind of like link the two, and then from there you can find them. Like I only know two, to be honest, and then one is a private company, which is still like a little dodgy.
Mm-hmm.
So I wouldn't say I have like a list of 10 companies. I only have like two, maybe. So
Right. Well, how did you find out about Tesla early on?
Tesla was actually talked about. Well, in 2014, I learned about the EV, and my whole thing was okay. I need to just save money on gas, so this car seemed like the right. But excuse me for a second, I got a cough. Yeah, so when I found out about the car, someone from when I was living in Toronto for a while, someone came up to me and he said, "Hey, they're not allowing this car to be in Canada because it's causing issues with the other car companies." I'm like, "What is it?" He told me about Tesla. So that's when I first heard about it, and this was probably I don't even remember the year. It was uh 20, 2012 maybe. Just guessing right now, but it was a while back. But I didn't know how to invest or buy stocks at this time.
Mm-hmm.
Later on, in like 2007, I met one of my friends who told me about this company, and then I was still only under the impression that it was just an electric car. And then as I started digging into it, I found out about the FSD stuff, which we already discussed. And then that's kind of like how I found out about it. But I was living my life. I wasn't going out looking for anything. It's just that it happened to come into my life, and that's usually how it works. Um, when you start digging for too much, it's just you have to kind of just analyze whatever's happening in your life and then go from there.
Mm-hmm.
If that, yeah, there was no strategy. That's all I know.
Right. That's insane to think about. Okay, what about Palantir? How did you hear about Palantir?
The book I read, now the reason I read it was because PayPal was started with Peter Thiel and Elon Musk, and I was into Tesla, and then I started learning about the PayPal mafia, and I learned about all the companies that Reid Hoffman, like LinkedIn, YouTube, Yammer, all these companies that started off they're all PayPal guys. They branched off, right? And then in this book, it talked about this. So learn about Peter Thiel, and then Peter Thiel's book, and then in here talked about Palantir. So I didn't really think of it as something special at this time. And even when I invested, when they first direct listed in was it 2020? Yeah, 2020. When I found out about it, I didn't have too much capital in it because I wasn't fully convinced yet. I didn't know what was going on. I just thought it was something cybersecurity based, right? And the reason this company was launched was because there's a story in this 0 to 1 book where they talk about Igor, the Russian hacker who they had to catch. So the algorithm they used to catch this hacker was this the starting point of Palantir, because they used it to in a way that they recognized unfamiliar patterns that are fraudulent instead of actually needing to going deep dive into like what exactly is going on. They did it in a way that was very secretive, so the Russian hacker wouldn't be able to find out, and they caught him. And then they took that same tech and they went to the government and said, "Hey, we can also solve crime with this," and that took off. So that's all I knew. And then there was an extended article around the direct listing period in 2020 that Beth Kindig launched, and it explained everything about Palantir, what it does, what it did, what they're capable of doing. And then I started learning about more and more. And then eventually it all clicked that it's actually a giant data play where they're taking everybody's data and making it efficient to project outcomes where you can just go into each business and have a tool set where you can just predict how, or not even just predict, but actually find out what are the instructions to actually fix this current problem that you're having in your business without needing to go to different people within the organization. So, and then from there, AI started connecting as well. So it all kind of just clicked as I kept learning 3 years along the way, from 2020 all the way to now. And conviction rate just kept getting higher and higher. So that's how it kind of came to my life. And then I'm only convinced in it because I've been involved in learning about it for so long, and I have yet to find anything else really that's doing as much, that's having as much progress as this company right now. So
Mm-hmm.
When you're talking about the learning that you're doing, what is it doing? Like, where's the learning happening from? You're not just reading blogs or picking up random books. You must be going somewhere specific. So you mentioned earlier in the conversation that obviously you have to have an interest in whatever you want to move towards. So if we want to build an interest in something, for example, like the beginning theme was if you're doing it for the money, you're obviously doing it for all the wrong reasons. You have to have an interest in it. If the interest is in the product for the purpose of making money, where is the beginning point? Where do we start building that interest about the product that we eventually want to work in? Because I didn't really care too much for Tesla. Like, I like gas powered cars, but I got into Tesla because you talked about it so much that I started researching it, lithium batteries and power management and energy management, going into solar. So now, where are you doing most of your research from? Who are you listening to, or what are you reading?
It's honestly not that complex because all you really have to do is listen to the CEO. So there's a conference call every 3 months. Listen to the CEO, see what they're doing, and then listen to where they're headed. Because 90% of the information is given by the company. You can go to their website, right? I think we just overthink a lot of things. 90% of the stuff is just right in front of you when you just go listen to conference calls. So they lay out the plan right in front of you, what they're headed, what they're trying to do, and their channel now launches videos on where they're headed, and then on top of that, you have customers that are using the product also talking about it. So it's right in front of you, to be honest. You don't have to overthink too much. And what'll happen is like you get into Tesla and then you start studying lithium batteries, and your mind goes off into I should invest in lithium batteries now because they might be the common denominator in all the cars. So how many lithium battery companies are you going to invest in now, right? You can create lithium batteries, but the product that's going to actually scale at a mass scale is going to be the car. So you
Right.
get distracted now with all this other noise that you don't need to focus on. So technically, just listen to the CEO. That's all you have to do.
Do
That
you
makes sense.
use 0 to 1 philosophy in your own life, like
Not
personal,
really.
or
No,
just investment theses?
mostly investment. I would say I do live my life in a way that I try to like just whatever is gonna show up in my life is gonna show up, and it's probably gonna eventually the dots are gonna connect. So I have to continue to live my life and enjoy my life and do things that I normally do because that's how things have just worked out. And I think if everybody just does that and then starts analyzing and connecting the dots within their life, and then that's the best way to actually do it.
Got it. Got it. Sweet guys. I think we should call it there. What do you guys think? I think we've done 0 to 1 for about an hour.
This is
0 to 1 hour. Karnvir, do you want to add anything else before we wrap it up here?
No, that was it. It was very eye opening. Well, ear opening to say the least. To listen to some of this stuff, right? That's why it wasn't interrupting too much because I was like, I just wanted to listen to what you guys had to share.
Mm-hmm. Yeah, I try to make this more not so much about like teaching, but just exploring how these ideas can shape the future, and again, even short term, your investment strategy and how you approach the market. So it's just
Yep.
a that had been recommended to me by Grogu, and he kept talking about it. So finally made me read it. He didn't really make me; he encouraged me to read it, and I thought we should get on here and actually do a conversation about it. So, Grogu, any final words here?
Yeah, fintech is not 0 to 1. That's pretty much it.
I would say fintech is 1 to 0.
I mean, you never know. Eventually, they might come up with some product. They might surprise me. But you know what? What's really interesting, I would say, is Cash App and Square, because they've kind of taken the approach of finding a way, and I think they will do this. This is one of the reasons I invested into Square a long time ago, because I felt that they were doing something completely different, which was being able to buy things with your shares by using Cash App. So if I go to Starbucks and Starbucks says, "Hey, $2," I was able you in a way you could convert your shares into dollar amount, and that would just automatically happen, and then taxable event, whatever, was taken care of automatically at the end of the year, and it was all, you could link it. And I felt that was super cool, because if I could buy stuff with shares, we can't do that, because shares are a form of money at the end of the day, and they should be used as that. And if we're able to do that, and I felt like that was one of the reasons. But then they kind of took a different turn with Jack, where he started becoming too involved with just BTC, Bitcoin, and he didn't get involved with other things. So it kind of made me question a little bit. So I got out, and I wasn't sure what was going to happen. But if we can have that in Canada, I would be completely on board with Square.
Gotcha. So fintech is 1-0, not a 0-1 company, and Cash App or Square might be. If they
might be, but they're not making too much money right now. But if they can find a way to do that stock thing, I would be so excited. I think that would be amazing.
Yeah, I think it's a great idea. I feel like crypto will do that first.
Yeah, I think so too. If they can, absolutely, with open ledger for sure.
Yeah. Sweet.
All right.
All right, guys. Thanks for doing this. Grogu, thanks again. Karnvir, thank you for being a great co-host. Guys, enjoy your Sunday evening, and have a good week. We'll do another one sometime soon.
Appreciate you guys.
Cool.
Thanks for
Thanks,
having
guys.
me.
Yeah, thanks.